You are looking live at a daily chart of the Nasdaq, which is actually up today 43 points or 0.25%. Closed at 17,127. But in the overall scheme of things, I mean, you could take a look at the Tuesday action where the index was down 577 points or 3.26%. Yesterday, it followed through to the downside, 52 points. So to just get 43 points back, I mean, that's not even a dead cat bounce. That's just roadkill at this point. For the week, the index is down 586 points or 3.3%. Just hideous tape. The September blues are definitely among us right now. So talked about the dog days of August, and I think we'd love to have August back right now. As you can see, August, it bounced off its moving average on that August 5th and then closed near the high of the month. But September has just been a drag. Like I said, down 3.3%. For the NASDAQ, I'm going to get to some of that action in a minute, but today's video is going to be kind of short. There's just not a lot going on. The financial pundits will have you believe that tomorrow's jobs number means a big deal. It doesn't. The Fed knows what it wants to do, and they're going to lower rates, and I'm going to get to that. What has been benefiting from lower rates? This is your Dow Jones. This is the strongest index. It just came back to its 21 today, closed just a tick above it. It was down 220 points or 0.5%. Not too bad. The IWM, the small caps, I think they're going to have trouble here as long as this, I guess the economy is going to sputter in the lowering rate environment. Well, I'm going to have to wait and see. The back half of 2024 is supposed to be the time for the small caps to shine, but we have not seen that yet. The mid caps, not much better. This one actually worse, closed below its 50. And then the SPY, 500 stocks, the S&P 500 trading just a tick above the 50. So they're all of them are pretty similar, except for the Nasdaq is the weak link, really weak link. It's 2.7% below its 50, and the Dow is the strong one, and the others are kind of like in between. You can see the Dow closed a tick above its 21, so not bad for the Dow. I just wanted to point out a couple things. I bag on these Mag 7 stocks because they haven't been performing recently. Apple, it traded below its 50 yesterday, and today, kind of recaptured it. It closed right at its 50. But if you take a look, take a step back, as Phil Lesh likes to say, and just take a look at what these stocks have done over the past year, and you can see, Amazon, Microsoft, Apple, of course, NVDA has been the best performer, 120% in the past year. Google has had some struggles. Tesla and Zuckerberg's company Meta up 70%. So Tesla's the only real dog in this pony show. The rest of them have performed pretty well above the Nasdaq and the S&P 500, I believe, up 22% for the Nasdaq. I spoke too soon, and the SPY 22% for the SPY as well. So they're outperforming for the most part. Like I said, besides Tesla and Apple's a little bit of a drag, but most of them are right there or above the indexes, and that's all you can ask for when you're holding stocks like this. Obviously, you can see recently there's been weakness here in NVIDIA, and but it's still been a big performer. I just wanted to point that out, even though they've had weakness recently. Over the past year, I think most shareholders are pretty happy with their performance. This is Microsoft below its 200. That doesn't look too good. Meta above the 50. Consolidating in a base. That doesn't look too bad. NVIDIA is the one that really needs to get cooking here. And it just fell out after earnings last week. Just has no strength. It had like the dead cat bounce for the Nasdaq. This is pretty similar to what the index has been doing. It was down, like 11% just this week. Got back, 1% today. But yeah, down more than 10% for the week. So not good for NVIDIA. And I'm not going to go through all these. I just wanted to point out that, since the market has acknowledged that the Federal Reserve is going to lower interest rates, I think a couple of the sectors that have done really well. One is utilities. Obviously, insurance and defense have done well, but utilities, the utilities has been on a roll, and also the financials, the XLF. So the XLU and the XLF have performed pretty well. Yeah, I know the financials are down today, but you could see since this August 5th date, it's been on quite a tear here. At least a 10% move there from 40 to 45. Anyway, just wanted to point that out. Not a big deal. What September is going to do for us is it's going to provide us some quality stocks at lower prices. So you're just going to have to be ready to jump in. And I'm not saying the whole month of September is going to be bad. It's off to a rough start, but there might be some point in the middle of the month where it starts catching fire here. So you got to pay attention, every day, watch your stocks. But stock like Eli Lilly today selling off, slicing its 21, looks like it wants to take a trip to the 50, This is just general, market weakness is dragging it down. Novo Nordisk sliced its 50 today. Some of these drug stocks that I like are, coming in at cheaper prices. Viking sliced its 50 as well. TGTX, the multiple sclerosis drug, looks like it wants a date with the 50. So, like I say, overall, in the grand scheme of things, I mean, we're going to get stocks at lower prices here. You can see it pulling back to its 10-week line, just a tick above it there, just right at the 8-week line, actually. All right. Anyway, I'm going to move on. Some of the software names that I like that are pulling back. Spotify, I mean, trading sideways down to its 50, closed just a tick above it. Just I'm watching this. I sold it. I'm not holding it anymore. But just some stocks that are going to give us better prices. This is TMDX, Transmedics, and not too long ago, last week or the week before, is up to 177. Now it's 143. Today it was even down, to 140. So just keeping an eyeball on Transmedics. Obviously, the 134, the 136 area is definitely an area of interest. We'll see if it finds support there, if it crashes through that area as well. So just something I'm watching here with these stocks. Elastic, they reported kind of in line with what they've been doing, 2018, 19% sales growth, 40% earnings growth. This thing sold off hard, and it's giving us prices back from earlier in the year, so I think we'll take that, or even last year's prices. So Elastic was down here 70s, last November. So just something that I'm watching is not, I'm not going to go out tomorrow and buy these things, but I'm just watching. This is Datadog. Another, this fits the growth profile. Got 27% sales growth, nearly 50% earnings growth, and this thing's just selling off. So once again, I don't know if it's going to come down to this 98 level, but if it wants to retest that level, there might be an area where you can pick stocks up cheap. Anyway, there's a lot of them. I'll go through that over the weekend. The stocks that I'm looking at when I have some time to stretch out. I'm not going to spend a lot of time in this market today. It's just doing nothing. Maybe the jobs number tomorrow will give us a little bit of a jolt. Who knows? This is Colgate making new highs. Super defensive stocks. Colgate, Clorox, Procter and Gamble, Johnson and Johnson, another one that's on the Dow, United Health. These things, they're super strong. General Mills, I believe, made a new high today. Yep. So Campbell's Soup, there's salty soups, made a new high today, then pulled back. So these are about as defensive as you can get. These value plays that pay 3, 4, 5% dividends, just super defensive. The insurance stocks they didn't get downgraded today. They got their initiated coverage by Wall Street firms with lower prices. Like I think Bro was like $90 and it's trading at 105, so they're just Wall Street saying these things have gotten a little bit ahead of themselves and they need a little bit of a haircut. And I couldn't agree more. These insurance stocks have been way too strong. Heritage is another one. Pulled back today. Allstate, I think they're 175 was the price target given, and it's already way ahead of this. Aflac, I think the price target was like $85, so way below where they're trading now. Wall Street's just saying these insurance stocks need to come in a little bit. Probably when they come in, they'll buy them and run them up higher anyway. That's kind of the way the game works. But today, a lot of them got the coverage initiated and the price targets were super low. Some of the defense names acting well and some are not. This is GE, another one that I'm watching, sliced its 50. Maybe we get, 150 price target on GE. Maybe we can pick it up, $13 lower. Something that I'm watching for. Lockheed Martin, another defense name, just pulled back to its 10. These things are super strong. Curtis Wright, pulled back to its 21. Hey, Howmet, pulled back to its 21. I'm not going to be buying these at this point. They're still a little extended here, even though this is Northrop pulled back to its 10. But I'm not going to pull the trigger on a defense stock that's trading, nearly 10% above this 50. So these things have gone parabolic. They need to cool off, like the insurance stocks, and probably, like the utilities and financials as well. Some of the, I haven't mentioned oil in a long time. There's a good reason for it. The price of oil has come way, way, way down. It was $69. As I looked this morning, there's a reason for that. One is the United States is just exporting oil. They're just producing a hell of a lot of oil these days, and it's just flooding the market. China has got a weak economy. They're not absorbing as much oil as in the past. So OPEC today paused their planned increase. They're going to increase and flood the market and crash it even further. I don't know when this is going to show up in the price at the pump, but man, these stocks have really been hammered. This is Chevron, which is a big part of the XLE. Between Chevron and Exxon, it's like 40% of the XLE. And you can see these are incredibly weak. Maybe Exxon, you come down to 108, maybe you get it there, or 110. The pay is like a 4% dividend, but it's not very far from those numbers, and even 96, who knows with the way the OPEC's playing around with the oil and the way that the United States is producing. We're just more efficient these days, and United States is a big exporter of oil, and there's kind of a glut. I don't know if the electric vehicles have impacted that much. I didn't ask, but these stocks are super weak, and I have not mentioned oil stocks in a long time. Even the these ones that are, the offshore, they install wind towers in the middle of the ocean. This is Tidewater, these things are really not doing well. Oceaneering, yeah, these are not good. So it's not just the tech stocks that are selling off. There's a lot of areas of weakness here in the market. And I try to show you strength, at the end of the day, but there's just not a lot of it right now. So, like I said, on Saturday, I'm going to do a little episode on stocks that I like, that I'm looking for, that I think are setting up at lower prices that we might be able to take advantage of down the road, a few weeks down the road. It's not going to take forever. One stock today, I got to point out, ZETA Global Holdings, they had a secondary offering of 11 million more shares of stock they're bringing on board. And if I look here, there's 146. So 11 million is not a whole lot, less than 15%. So yeah, less than 10%. What am I talking about? Yeah, it's a very small percentage. What did I say? 146 million outstanding. They're bringing on another 11, so maybe 157 million in the float for ZETA. But the stock went up 8%, so that's all that matters, is how the stock responds to the news. And the secondary offering usually could be a drag on the stock, but not this one. So this one is showing incredible strength, and they've been reporting strong earnings. This has the growth profile. It's one that I'm looking that was hoping would pull back, but it didn't today. Another one, that I'm watching that actually own is VIRT. This one just surfing the 10. Some of the financials, I mentioned that financials are doing well. So I don't know how long this is going to last. But you ride that trend till it bends at the end, and then you dump it quickly. Bank of America, another financial stock that's setting up in a base here. I'm not going to put this on our ready list because there's just not a lot of stuff working right now. RY is the Bank of Canada, Royal Bank of Canada, the real strong stock, making a new high today in ARGX, a medical biotech stock that broke out today, 4%. Looks fantastic. But like I say, in a tape like this, that'll probably sell off tomorrow and pull back to a moving average in the coming days and weeks. So anyway, not much going on. I am going to stop there because, like I said, there's just not a lot going on in the market. Thank you for watching, except for I lied under the great Steve Jobs. I have one more thing. Some earnings tonight. This is IoT. This is, you can see a real herky-jerky, back and forth stock. I cannot stand stocks that do this. I like stocks that trend higher over time. And you can see over time, this thing has just gone sideways for a long time. And yeah, so you can have it. It's up 6% after hours though. DocuSign reported, I saw that they beat top and bottom line. They raised guidance, and how do you do? It's down 2%. So yeah, you don't want to be reporting good numbers in this tape. They're just going to sell your stock. And then Path, I believe this is a Kathy Wood stock. I have no interest in it. PATH, if I could type in the right ticker symbol, up yeah, nearly 8%. Yippee. So you can see it sold off after last earnings hard to the tune of 34%. Ouch. And now, stayed flat for the last 3 months, and now it's going to get 7% back. So if you want to wait 3 months for 7%, no, thank you. Plus it's a coin flip, these earnings reports. Smartsheet, they have interest from activist investors, I guess, that might want to buy this company. I do not like to buy stocks on rumors of buyouts because if it falls through, it's going to come right back down here and you're going to be out of luck. But they reported tonight, so up 2%. I don't know. I'll have more in the morning on these stocks that are reporting. And then Broadcom reported, okay, so down 5%. Similar, I thought this might happen, a similar reaction to NVIDIA from last week. They reported strong numbers and sold off. So, at this point, I hate saying this, but earnings don't really matter. They're just selling stuff. So eventually they'll matter. I mean, I'm a fundamentals guy. I mean, earnings do matter, but just right now, stocks are being sold. And I'll have more in the morning. They might have, butchered the quarter. We'll wait and see, but I'll have more in the morning on this. But that's going to drag down, Broadcom's a 711 billion market cap stock. So it's going to be a drag on AMD, which doesn't need any more drag. Qualcomm, Qualcomm's flat after hours. It's below its 200 though. Look at that. That thing looks terrible. I believe they have their ex-dividend. I think they go ex-dividend today or tomorrow. Qualcomm. Anyway, like I said, I'll have more tomorrow morning. The jobs number tomorrow. Like I said, the media might want to make a big deal out of it. It's not a big deal. The Fed knows what they want to do. They're going to lower rates probably a couple times, this year. And so the number tomorrow is not going to have any impact on what they're going to do. And that's the way it should be. They should have kind of an idea of what direction they're going and not relying on one silly jobs data that will be revised 10 times in the next year. And, they're going to lose, 1 million jobs or, add 100,000 jobs. Who knows? It's all hocus pocus at this point for these jobs numbers. But anyway, just take a look at the tape. You can see the Nasdaq is in a downtrend. It's easy money, when we're trending like this. These are the kind of trends that I like. And then it gets real hard when it starts doing this. This is hard to make a buck in this type of a downtrend. We need the index going with us, and we don't have that right now. So just be patient. And, I watch it every day. And like I said, on Saturday, my weekend review, I'm going to post some stocks that I'm watching that I think are going to be bargains. You go to the store and you want to buy that sweater and it's $100, and the next time you see it, it's $50. Where are you going to buy it? Half off, right? You want that half off sale. Or if you're going to buy a car, do you want to spend $50,000 on a car? Do you want to spend 25,000? The same car, I'll spend less. Thank you very much. So just let this thing come in, let the stocks come in, watch them every day. But like I said, they're probably not going to set up a nice little basis for us. You're probably going to have to buy something, like this as it comes down to, perhaps maybe $90 or so. A little more gradual this time, not just a sudden sell-off. So we'll see. Take it one day at a time. Anyway, thank you for watching. At mcstockcharts.com, we never give up, ever.